I look at it and say, oh my gosh, there's definitely paper Bitcoin, right? And it's not where you think it is. One of the big banks will eventually blow itself up because they don't understand Bitcoin. When you revalue the gold, which is carried on the books at $35 an ounce, who benefits the most from that? The big story is control of US financial markets got taken away from the globalists in London and brought back to New York. We can actually get the benefit of the internet for money. We've never had that. You kind of know that the system's working against you. Is Bitcoin going to stop becoming a risk barometer and become the safe haven that folks think it will be? And the answer is...
Welcome back. Today we have Caitlin Long, a Wall Street veteran who operated at the highest levels of institutional finance for decades. Believe it or not, I know it doesn't look like, looking at Caitlin, that she's been in the space for this long, but believe it or not, she has. And working at some of the biggest names in Wall Street and across the world, Caitlin saw firsthand the cracks in our financial plumbing and pivoted to Bitcoin around 2012. Now the founder and CEO of Custodia Bank, one of the architects behind Wyoming's 30 plus Bitcoin and crypto laws. She is the leading voice in why the world must move from the paper games of the old system to the provable transparency of the new. Thank you, Caitlin, for joining us here today.
Thanks for having me. Yeah, I will say Bitcoin has kept me young. It is really fun to work with. A lot of especially in the early years, so many of the folks around Bitcoin were, teenagers and 20 somethings, and it's great. And I've really enjoyed working with everybody, but especially in those early years, some of the developers who were the savant teenagers. Trace Mayer got started in Bitcoin when he was like 16, something like that. Yeah, so crazy.
It's wild. And, honestly, that's a kind of a good place to start because there's so many things we're going to try to weave together here. And this is just one spoke to kind of come into the center of the wheel which is the younger generation, the under 40, under 45 crowd, is anyone who's paying attention at all today is vehemently opposed to pretty much anything to do with the legacy system, media, culture, everything, right? And that's what Bitcoin, the promise maybe of Bitcoin and what you guys are doing with Custodia, et cetera, et cetera. So when you kind of zoom out and you kind of see everything, so you see both sides. I mean, does the entrenched establishment realize what's coming going forward? And is it just kind of like,
No, but it's like you can kind of generalize, but there are a lot of exceptions to the rule. I mean, there are boomers and even greatest generation owners of Bitcoin, right? Just like there are millennials and Zoomers who prefer to bank at a bank and have a personal relationship with a branch manager, right? So there are exceptions, but it is a general truth that Bitcoin users tend to skew younger. I teach classes as a guest lecturer at the University of Wyoming Blockchain Center and always ask the students, how many of you have set foot in a bank branch? And no hands will go up. So, I mean, it's generally true that people who are interested and self-select into learning about this technology are not going to have ever written a check before. And it's interesting because some of the people who joined, some of the engineers who joined Custodia in the beginning didn't like the old traditional system and wanted to be able to write software to pay their bills. So they didn't have to go in and click through on the online banking and, never have to write a check again. So, solving real practical problems. And I think if you look, let's put it this way, some of the traditional banks, average customer age goes up by 1 year every year, which means they're not recruiting younger folks to come into their customer network. And that should scare the boards of directors of organizations that have that happening. If they're not able to deliver a better technology experience, much less all the philosophical stuff, I'm just talking about the practical, user experience, then I think it's time to really start to look into innovation. And I will give credit to the Fed's Vice Chair for Supervision, Mickey Bowman, and also to OCC bank regulator Jonathan Gould, both are Trump appointees. Both of them have said that they're going to start dinging banks for not innovating. It is the exact opposite of what we experienced in the Biden administration, where anybody who tried to do anything different had a target on them. And of course, we were kind of one of the poster children for that.
Yeah, and in saying that, what are, clearly you can't, new administration comes in and there's still going to be vestiges of the past. I mean, where are we at with Chokepoint and what's going on there?
Oh, it's still happening. I was just looking. I fly by Twitter every, 4 or 5 times a day, and I have a pretty curated news cycle. I find that the people that I follow tend to give me the most trusted, in my mind, news sources. And one of the people that I follow today was putting out their interactions with Chase, and during the Bitcoin crash of the last few days. We're recording this on Friday, February 6th. Somebody was taking advantage of it and trading and then sending dollars back to their Chase account, and Chase closed their bank account. And of course, they can't tell you why. Under the law to defend the banks, they are not permitted to tell you why. But this is one of the interesting things, because there's a big fight going on right now in Congress. And we've heard about the White House meeting that took place earlier this week. I kind of laughed from the outside at the setup, and I'll tell you why in a moment. But one of the big concerns of the banks is the disintermediation of bank deposits into the crypto industry. But heck, if the banks keep closing crypto company customers' accounts when they try to bring the dollars back into their bank accounts, then it's not a shock that people are scared to bring their dollars back into their bank accounts. And this has to get fixed, because if the bank folks are concerned about maintaining the core deposits in the banking industry, which I support, then they have to be aware of the fact that closing bank accounts and these very public examples of this happening scare people and cause them to, when they migrate deposits over to the crypto industry, cause them to leave those deposits there. So I think there's a lot that needs to get solved. Senator Lummis last week in the local press here in Wyoming had a story that she's about to do hearings again on Operation Choke Point 2.0. She's very aware of what happened to us, as she noted in the story. She's also very aware of what happened to Kraken. So what has happened is she did those early hearings and then started investigating. And now it's time, after she's had the opportunity to investigate, to go back and have more hearings. So I'm very much hoping that something gets done. A lot has been reversed, to your point. A lot of the bad actors are gone, but not all of them are gone from the agencies. And so this is part of why it's still happening.
Are you concerned that the double-edged sword of Wall Street, where the perception is reality, right? And it feels like, as a Bitcoiner, you look across the spectrum and a lot of people just see it kind of, when you look, I'm talking about even the 99% of people, maybe the people, the pre-coiners, no coiners, where they just see it as a Wall Street asset. It's just, another thing that you can use to invest in. It's not a protocol outside the system. And, has the promise of Bitcoin lost its luster with the masses, I guess? Did we kind of lose the plot a little bit with Wall Street coming in over the last few years?
Well, I'm not sure that the masses ever really understood the philosophical argument behind it. More and more people are waking up. Frankly, I think there's a Streisand effect thing going on with the fight between the banking industry and the crypto industry. Very, very public fight. And it's causing more folks, more normies to wake up and realize, it's Henry Ford used to say that if people understood how the banking system worked, they'd immediately withdraw their funds and stash them all into their mattress. I'm bastardizing his quote, but you get the gist. Yep. That most people don't really understand how it works. And because of the nature of this fight, it's caused a lot of people, if they are paying attention to the news, and if it is hitting their news feeds, they're learning for the first time. And frankly, some of them, no doubt, are starting to go down the rabbit hole. So there's a Streisand effect thing, doth protest too much. But also part of the reason that I alluded to this earlier, that we're on the sidelines, just, watching with popcorn, so to speak, is we're working with a traditional bank to bring tokenization to traditional bank deposits. So we don't look at this as a world of there's TradFi, traditional banking, and stable coins, and they're two completely separate systems, and neither the twain shall meet. And JP Morgan itself put out a study. They anonymized their own data during the 2020 bull market for crypto. 88% of the money that was withdrawn to Coinbase through the ACH system from JP Morgan never made its way back to JP Morgan, right? This is what they're afraid of. Part of the reason, again, as we were talking about earlier, is if if there's a fear that people, by bringing money back from Coinbase into their bank account, are going to get their bank account closed, then there's a very practical reason why people don't bring their money back. But aside from that, the aha is that tokenized deposits can pay interest. So this whole notion of traditional banking versus stablecoins, where traditional banks can pay interest and stablecoin issuers cannot, well, there's a giant middle ground, and that is bringing tokenization into the banking system, and banks can pay interest. So there's, just to give you a sense of the relative size, banks, the demand deposits in the banking system are $5.7 trillion, and stablecoins, last I looked, were about 300 billion. So wow, a tiny fraction of the total. If we can actually bring wallet infrastructure into the banking system, it's wallet as a service, and allow that wallet as a service to mirror bank accounts, all of a sudden the tokenization of that traditional 5.7 trillion becomes very real. And it's going to dwarf, I think, the size of stable coins. And at some point down the road, we won't even be making those distinctions. Everything's going to be tokenized. And there will be banks, there will be non-banks. I'm not sure how it's all going to play out, because what's happening is a lot of non-banks are following in the path that Custodia helped trailblaze back in 2020 and getting bank charters. So it's kind of, that's the path that a lot of non-banks are taking now. And there's just an inherent clash as we're watching, but there are corners of the banking industry that really understand this and don't see it as a conflict.
People think that Bitcoin is just, again, this, like, it's the gold ETF, it's going to be suppressed. And I've seen you talk about this over time, and not many, this doesn't get enough airtime. The real distinction of what Bitcoin does versus every other asset, Bitcoin being every 10 minute auditing system that people don't understand. But do you think I'd love for you to explain that part of it, what sets Bitcoin apart, but also, do you see a world where you're going to have, I'm just throwing out Chase Bank, but huge entities at Chase Bank or countries blow themselves up because they're playing funny games on chain?
I've been predicting since for almost a decade that one of the big banks will eventually blow itself up because they don't understand Bitcoin. It moves that fast. It moves faster than someone who has borrowed against it can post collateral, right? Yeah. Because the traditional dollar system is moving so slowly. So as a result, I really have been cautious about leverage-based financialization. Let me step back before I more fulsomely answer your question and define what I mean by that, because I've talked about it on Twitter. There is a difference between, and I'm using the Mises approach of circulation credit versus commodity credit. Commodity credit is credit where somebody has saved, they have earned income and saved it and they're turning around and lending it out, versus circulation credit, which is creating credit out of thin air. There's legitimacy to credit that's commodity credit. That is absolutely a healthy thing. It's the circulation credit where you're creating credit out of thin air that create these booms and busts. I do believe in Austrian business cycle theory. And what's happened is that that it's very hard to track the difference between those two things. This is why you don't actually see, a report of how much is circulation credit versus how much is commodity credit. And I've tried to estimate that by going back and looking at savings, because savings are, of course, savings become investment, right? And so if you look at saved income over time and start accumulating and saying, okay, well, that saving that wasn't consumed after the income was earned, that is legitimate, a pool of savings to be lent out. And that is not going to be circulation credit. And then look at everything else on top of that, in excess of that cumulative amount. That is circulation credit. And that's what creates the booms and busts. Okay. So with that as a background, I think there's a perception that a lot of Bitcoiners and Austrian folks are anti-credit. We're not. We're anti-circulation credit. The legitimate savings absolutely should be circulated through the economy as investment capital. And that is not inflationary and does not foment booms. Now, here's the thing with Wall Street, with Bitcoin. because you can't tell the difference, it's not easy to discern how much credit is just created from thin air versus how much was accumulated savings. That's when you really, the Wall Street firms will start to get into trouble. Okay, now there's been a big debate, and there are some people I really respect who do not think that this argument makes sense with regard to circulation credit and regard to paper Bitcoin. And I look at it and say, oh my gosh, there's definitely paper Bitcoin, right? And it's not where you think it is. A lot of people will naturally look at the ETFs. Gary Gensler, the best thing Gary Gensler did during his term as SEC chair in the Biden administration was to ensure that the ETFs were not allowed to rehypothecate the underlying Bitcoin. So they are kind of narrow banks to use a banking phrase. The ETFs are one for one backed with real Bitcoin because they're not permitted to rehypothecate. And rehypothecation is where Wall Street firms can get themselves into leverage trouble because they're not able to track how much of the actual collateral backs the liabilities on their balance sheet. But in the case of the ETFs, Gary Gensler did that well. He made sure that Wall Street could not play their typical rehypothecation games. A lot of ETF collateral outside of Bitcoin is rehypothecated. It's standard. Go look at your brokerage account agreement. Go keyword search it for the word hypothecation or rehypothecation. You're going to find it. That is a word that, by the way, the average person on the street will have no idea what that means. It's a big, scary word. And what it means is circulation credit. It means this, leverage-based financialization. So one of the challenges, to bring it back and more directly answer your question, one of the challenges is that Wall Street risk models can't handle anything quite like Bitcoin, right? Because they're on, delayed net settlement cycles, right? And they're waiting for the dollar leg of transactions to catch up. Those are still settling on very slow, antiquated 1970s systems for the most part with Fedwire and ACH. Whereas with Bitcoin and even stable coins, those are settling on a very, very fast settling system. I really feel for a lot of people who got stopped out in the recent crash. There were a lot of people who were borrowing against their Bitcoin so that they didn't have to pay capital gains taxes. And they may have, over collateralized their Bitcoin loan 2-to-1, and Bitcoin's almost down 50%. Yep. And they might have lost their Bitcoins that way by rolling the dice that way. And they should have understood that was the risk. But Bitcoin can be that volatile. We've been in a period of very, very low volatility for Bitcoin. So that strategy was safe for the better part of a year. And then all of a sudden, Bitcoin's volatility just spiked. And that happens in Bitcoin. And coming back to the Wall Street point, no other asset behaves that way and settles that fast. And this is the kind of thing that makes the old Wall Street risk models not apply. And if they are applying without realizing they're dealing with a different animal, that's when they can get themselves in trouble. And I do believe at some point that a big traditional financial institution is going to get itself in trouble with Bitcoin, not from the ETFs. I saw a very interesting analysis yesterday about the potential for options on the ETFs to be the source of all this forced selling. And again, that's where you get into the paper Bitcoin. It's not the underlying ETF itself. That's backed one for one. It's everything, all the derivatives on top of it. That's where you start to get the paper Bitcoin leverage. And this person, I wish I could give them, I forgot their name. I wish I could give them credit, but I think it already had 1.1 million views. So it was a very, very engaged with tweet. And he predicted that the paper claims to Bitcoin outnumber the actual Bitcoins outstanding, of which there are north of 20 million, by a ratio of 6-to-1 already. Wow. It's not as leveraged as the gold market. Gold and silver have been leveraged more than 100-to-1 for years. But Bitcoin's starting to get a lot of paper claims, and that is causing a lot of concern out there. And lastly, I'll close by saying I will dig up an old tweet thread that I did that explains why this is such a problem. Because when you create artificial supply, by creating a substitute. The paper claim is the substitute for the real thing in especially boomers' eyes, right? Because they're going to try to buy this through their stock brokerage account, and their brokerage firm is not letting them buy spot Bitcoin, so they'll just buy the ETF instead, or buy a closed-end fund, or buy a Bitcoin treasury company stock. Those are paper claims to Bitcoin. If they're not backed one-to-one with real Bitcoin, then you start to get into the leverage-based financialization problem. And I guarantee they're not all backed one-to-one with Bitcoin. We've seen this before, where the Bitcoin companies like Celsius and BlockFi turned out didn't have the Bitcoin. And of course, FTX, the most famous fraud, didn't have the Bitcoin that they'd promised out to their customers. There were paper claims to Bitcoin there, and look what happened.
We all know health insurance is basically the fiat system of healthcare. The biggest debauchery there is. It's expensive, confusing. Somehow you still end up paying hundreds of dollars for a Band-Aid. We moved to crowd sharing almost 5 years ago. It's the best decision we ever made. Instead of sending your money to the insurance company's black hole, you join a like-minded community that directly funds each other's medical bills. Simple, transparent, way cheaper. And that difference you save, you can invest in Bitcoin. It's an amazing win-win. And look, we're part of the Bitcoin community because we believe in freedom, decentralization. Crowd Health brings that same mindset to healthcare. You choose your doctor, you pay in cash, and the community's got your back when the big bills hit. No networks, no middlemen, no bureaucrats trying to approve your care, just people helping people the way it should be. You make decisions about your health. That's as sovereign as it gets. So if you're ready to take the orange pill for your health, this open enrollment, go to Join Crowd Health to get started for $99 for your first 3 months using code Brandon at joincrowdhealth.com. That's joincrowdhealth.com, code Brandon. Crowd Health is not insurance. Opt out. Take your power back. This is how we win. Generational wealth doesn't happen by accident. Bitcoin fixed the money, but it didn't fix the system of protecting and passing it on. Bitcoiners, we have to live in two different worlds, idealism versus pragmatism. That's where Meanwhile comes in. It's the world's first Bitcoin-denominated life insurance company, regulated in Bermuda and built entirely by Bitcoiners for Bitcoiners. With Meanwhile, long-term holders can grow and protect their Bitcoin wealth through tax-free policy loans, no repayment obligation, no margin call risk, while making inheritance simple and secure and entirely in Bitcoin. It's about sovereignty, stewardship, and building a legacy that lasts centuries. Because if Bitcoin is forever, your plan should be too. Learn more and sign up with code 4QPBWC at meanwhile.bm. That's meanwhile.bm, code 4QPBWC, or just sign up in the link in the description below. Yeah, I just mentioned to you offline, we just interviewed Samson earlier this week, and we just published it yesterday. And he had said, like, yeah, I think there's malevolent stuff going on, like sure. FTX style stuff out there. Like there's got to be. So to your point, absolutely. I mean, just edifying what you're saying. I mean, honestly, Caitlin, where does this surprise? I think there's a lot of people out there that feel like, when does this end? Like, Bitcoin was supposed to fix all these things. Like, how come it's the same shit going on? Like, can the contagion start externally, like some other random thing, and then people are trying to remove their Bitcoin, and then it's an ETF, and it's or whatever it is, right? Like, it could start from somewhere else and then lead to Bitcoin, and then people are blowing themselves because of that. But it starts somewhere else. And is this just one of those things where, hey, this is going to take time to play out, because it truly is this saying of, you don't change Bitcoin, Bitcoin changes you, and society is going to have to learn these lessons over time?
Yes, I believe that's true. And I think what's fascinating, and nobody predicted this, is that Bitcoin would become such a risk-on barometer, or risk-off barometer, as the case may be, because of its deep liquidity and 24/7 markets. And so oftentimes what you see on the weekend is, big news comes out, like U.S., going into Venezuela to arrest Maduro, right? Big news comes out, financial markets are closed, but Bitcoin's not. And so Bitcoin leads financial markets in those instances. And we've seen this again and again and again. Now, the real question becomes, is Bitcoin going to stop becoming a risk barometer and become the safe haven that folks think it will be? And the answer is yes, but it might be at the very end, right? And when I say the very end, I don't think that the US financial system is going to implode in a supernova that some folks are expecting. I acknowledge it might, because it's that leveraged, but I just think there's still enough balance sheet there for the US to continue to borrow against. And we are the cleanest dirty shirt. A lot of other fiat currencies, I think, are going to die before the dollar does. And they're going to be safe haven flows into the dollar before the dollar, comes to that end. So is it plausible that Bitcoin only becomes the safe haven asset in that extreme meltdown scenario? Yes, it is. And in the meantime, because it is so liquid and it trades 24/7, it becomes a leading indicator of where financial markets are going to go once they open, and once you get into the peak liquidity of sort of the Monday through Friday New York trading hours, which are the peak liquidity hours for most financial markets.
So I'm gonna bring up Larry Lepard's name here, because he's I know you're good friends with him. I'm very good friends with him as well. So I'm gonna bring him up. I know he's like the poster boy of things are gonna crash. We mentioned Robert Kiyosaki, or I told you offline Robert Kiyosaki, and he's also the poster boy of predicting 30 depressions over the last 10 years or whatever. So love Larry to death. I know you do too, but I know he's more bearish short term, and you're saying, hey, you might be right, but I just think this plays out way further down the road. Is it, and I talked about mindset too, even like the confidence of everything, like even hyperinflation itself, it's just confidence at the end of the day, right? If a certain amount of population, 1%, 5%, whatever it is, loses confidence, does it just change overnight? I feel like that's, to me, what I feel like for a long time. Yeah, people have been just like waiting for the shoe to drop, and all of a sudden confidence is gone.
We're watching it in Iran right now. If you're paying attention, again, by the way, Twitter's where the news is breaking. I mean, you're not seeing that on sort of, CNN.
I don't think Epstein was nowhere on the legacy news, Caitlin. Nowhere.
Oh my God. I had
zero
to
place.
stop looking at all the Epstein stuff. It was so dark and so awful.
Yeah.
It just, and I was pretty engaged with it for a couple of days as we're learning a lot. But just the evil in the world. Wow. And just the abuse of power of powerful people. And I have, by the way, if you go back, you can look, I've been tweeting support for the Epstein victims for years. So I really pray that they finally get their justice, that it may not be coming through the justice system if you believe that they're not planning to. I don't believe this, but because it sure looks like there are chargeable crimes that have come out of that pool of evidence, and they said they're not going to charge anyone. It's sad, but the victims are at least getting some form of justice in the amount of ostracization that's happening of these misbehaving billionaires and power abusing elites. But to your point, like that, if you're not watching on outside of Twitter, or sorry, if that's where your news is coming from is outside of Twitter, then you're not getting a lot of this. But boy, it's been hard to miss if you're on Twitter. But yes, I mean, the other big story that's really not being covered outside of Twitter is what's going on in Iran, because people have been apparently from inside the country have been able to get videos out. Now, how many of those are legit? How many of those are AI? We don't know. Of course, as AI proliferates, you have to be even more cautious than you were before about deepfakes and the like. But there's just a pretty high quantity of volume of videos coming out that do make it look like there is hyperinflation happening in Iran right now. And so if you look at what has happened, it's happened over about a 2-week period, right? And if you're following the stories and you believe them, and if they are true, then what has happened is that a major bank collapsed there, and that has created the collapse in the currency, the hyperinflation, and possibly behind the unrest. So to answer your question, it can happen fast. Now, this is a world reserve currency that we're talking about, the US dollar coming back to the US. That's different, right? And I actually am in the camp that Tether is extending the reign of the US dollar as a global reserve currency, because they're bringing in, I think that now they have 500 million active monthly users. It's an incredibly high number, and they're bringing in savers from villages in emerging markets that don't have access to electricity, but Tether installed kiosks in the nearby towns, and people can walk to the town and deposit their wages in Tether and swap out their dead phone batteries for live ones. So even though electricity hasn't reached the villages yet, they are able to save in US dollars. That is a whole new source of demand, marginal demand for US dollars. It gets aggregated into Tether's T-bill reserves. And there's now, I think they're the 7th or 8th largest owner of T-bills. It's just, that was a source of demand for T-bills that no one predicted even 5 years ago. Well, maybe 5 years ago, some did, but 10 years ago, certainly nobody predicted it. And B, nobody knew it was even possible to be able to bank the unbanked and do it in a profitable way. Right. So it just gives you an example of how the U.S. has been able to extend this. And there have been several extensions of this. The rise of China in 20 years ago it was another big one where they really became a global superpower and a global economic power about 20 years ago. That helped extend the US dollar's reign because China did not want to have the yuan free float. And as a result, US dollar bonds, in other words, treasuries and mortgage-backed securities, became the global reserve asset of the day because China had very strong marginal demand for those, pursuing a mercantilist policy of keeping the yuan low, not letting it float, free float. And as a result, in order to enforce that, continued to buy dollars to keep the dollar higher. Now, those who criticize that policy, that in and of itself, what I just described, hollowed out the U.S. industrial base, they're absolutely right, because the U.S. dollar was kept artificially high as a result of being the global reserve currency. We're watching the Triffin dilemma in real life, in real time. However, the reason I brought up China is that was just one of the things that extended the world reserve currency status for the US dollar. And I think Tether is the latest one. Will there be more, or will we move to a multipolar world? I don't know. But I just think that folks who are expecting the sky to fall tomorrow, I concede they may be right. There are a lot of fundamental reasons why they could be, but the likely outcome is not that it happens that quickly or that it happens with a big bang. Seyfeddin and I debated this, I think, in 2018 on his podcast. And we ended up agreeing most likely what will happen is people will just walk with their feet to better systems. We're literally watching it happen with Tether. And by the way, if Tether had ever asked for permission from the US to do that, of course it would have been told no, right? And look what it created by being outside of the permission system. So here we go.
It's a lesson. That's a lesson for life, right?
Yeah.
Ask for forgiveness later, right?
Well, I don't know. Somebody who did ask for permission and got skewered for it.
There you go.
Yeah,
there you go.
Yeah. I mean, certainly in the last few years, the right approach was not to try to work with the powers that be. But let's see if that continues. I actually think that the opposite approach is the better approach now. That the one that we've tried to follow the whole time.
So in a little bit, we'll definitely get into that more because it's fascinating, obviously, what you guys are doing. But I want to put a bow on something that I kind of brought. It was later. I was going to question you on, but now I'm going to ask you now, which is the Epstein stuff and just any concern at all. I mean, again, perception is reality. I think this was very tough. Like people conflate these two things. Like Bitcoin, the network does its thing, TikTok next block every 10 minutes, but perception is reality for humans.
Well, so to your question, there's been some, allegation that Epstein somehow controlled the Bitcoin core code and was because he was supporting developers through MIT Media Lab that were paying some of the independent Bitcoin developers, that somehow there's some backdoor that got put into the Bitcoin code. Bruce Fenton did a great job disabusing that FUD. And I think a lot of people, it's very easy to just latch onto with the firestorm over Epstein, but go educate yourself. How many lines of Satoshi's original code are still in Bitcoin? What does the fact that Bitcoin is open source and that anybody can read any of the code and see where it came from, what does that mean? When you start to really think that through, you realize the fact that Bitcoin is so transparent and anyone can validate it by just going and looking at the lines of code and understanding what those lines of code do, you quickly realize there is no backdoor, and it could not be more transparent. So
the Clarity Act. So, we've kind of danced around this a tiny bit, and David Sachs, wrong Sachs. He had just said that hey, the banks are going to comply. They're kind of at this stalemate. Where do you kind of see this? And you obviously are infamous for the big banks versus little banks and the battle that goes on. How do you see the Clarity Act? How do you see this stalemate playing out?
Yeah, it's a good question. I'm not paying that close of attention to it. Like I said, I'm just kind of sitting on the sidelines with the popcorn because we've found that big middle ground with our bank partner Vantage Bank, which is let's bring this tokenization technology into the traditional banking system and tokenize traditional bank deposits. So there is no inside and outside, traditional deposits and stable coins, two completely different systems. Now we're just bringing the technology into the background of the banking system. And so I think stablecoins will not end up being, I think they will far exceed the optimistic dollar value, but in tokenized deposit form, if that makes sense. That this whole notion that there is a stablecoin market, 90% of which is done for crypto trading, that will stay niche. It's not going to take over the traditional system. The traditional system is going to end up adopting tokenized deposits. And this technology is coming in. And by the way, we're doing a lot to bring Bitcoin-based smart contract technologies into traditional finance as well. Of course, if you look at all the stablecoins that are being issued for the first time, almost everybody's starting with Ethereum. That's the smart contract system that makes the most sense. It's the most penetration tested. It's the most battle tested. So institutions come in first because of that. But I think there will be a fairly fast pivot to the Bitcoin-based systems. And there's some really interesting things happening with Bitcoin L2s that are bringing higher throughput and smart contract technologies, but they're anchored to Bitcoin itself. So keep your eye on that. But yeah, I don't come down on, either side. I look at it and say, while everybody's distracted by what's going on over here, look at what Custodia and Vantage are doing. In fact, we just got endorsed yesterday by the Texas Bankers Association that endorsed the Vantage Bank system, of which Custodia operates in the back end, for tokenized deposits. And so the banking industry is really coming our way, folks, in pockets of it, in ways that would surprise you. So hopefully, we'll watch all this. But you alluded to something else, which is the big difference between the large banks and the small banks. One of the interesting pieces of history in the United States, and I'm forgetting the author's name, but I heard a very interesting podcast done by Jason McCullough and Kia Haslett, probably it was last fall, about unit banking. What is unit banking? Unit banking basically means hyper-local banking. Mm-hmm. And this academic was looking at the history of why the US economy evolved and grew so much faster than Canada. Canada is very European in its banking sector structure. It has a handful of very, very large banks that, by the way, Canadians tend to love. And in the US, we have right now 9,000 some odd banks. Okay, it's a very different model. That's down from about 40,000 in the last 4 decades because of consolidation. But what that tells you is just that there was a hyper-local approach to banking, hyper-decentralized in the small d sense of the word. It wasn't a nationwide system. And by the way, if you look at the history of the Federal Reserve, there was federalism in the Fed. Why did the framers of the Fed in 1913 create 12 different Federal Reserve banks in the different regions of the United States? Yeah. We look very different. Our central bank looks very different than the central bank in the UK or in any European country or Australia, for example. They have a single one that serves the entire country. Well, in the US, Congress wanted some federalism in the Fed, and it used to be that those 12 different regional reserve banks set their own interest rates based on what was happening in the regions. And of course, back then, the US was very much an agricultural and industrial economy, and agriculture went through very different seasonality. And so you'd have, big influxes of cash and outflows of cash at the different reserve banks based on whatever the crop cycles were or the industrial cycles were, right? And so it was much more decentralized, and you just didn't have this notion of centralized control. Now, ever since the Federal Reserve Act was created in 1913, what do you guess happened? That decentralization got gradually torn down. And what's fascinating is that Wyoming's first congressman, Frank Mondale, who was a rancher from a tiny town in Wyoming called Newcastle, he voted against the Federal Reserve Act, and he warned that all the attempts to put federalism into the Fed would ultimately fail because the moneyed interests are going to want to consolidate power over money and credit in New York and Washington, D.C. Boy, was that prescient, because that is exactly what happened. And the regional Federal Reserve banks still exist. But very interestingly, one of the things that came out in the Custodia lawsuit, it's buried in the bowels, but I've pointed it out to a couple of academics. It's publicly available information, is that the 12 regional reserve banks have cross-guaranteed each other since 2016. So that removed the last vestige of federalism from the Fed, right? Because they're all one balance sheet now. If they're all cross-guaranteeing each other, they're not separate functionally anymore if they cross-guarantee each other's, I forget the phrase, but major losses or something like that. It's all out there publicly available for academics or interested parties to go find it, buried deep in the bowels of the, thousands of pages of documents that came out in that lawsuit. But I wanted to, when I saw that, I thought, wow, that's just, as historians will find that interesting. It's one of those nerdy things that only nerds and historians, monetary history nerds would really appreciate. But it's the last vestiges of federalism gone.
It's incredible. You made me think of the New York Fed. An article I always talk about is one from the 40s. It was right after World War II, and it was Beardsley Rummel, the head of the New York Fed, and he wrote an article in American Affairs magazine saying taxes for revenue are obsolete. And in there, they outline the reasons they tax you is to coerce you, to redistribute wealth, all this stuff. I mean, it's so wild that it's just sitting there in plain sight. Like you just said, that's what made me think of it too. It's like, it's there if you want to go parse through it, if you want to go look at it, and it's just right there. And then you have things like what was happening in Minnesota over the last month or so. People really, we're revolting on the taxes. And then it's just, people are waking up. To your point earlier, it takes time, but there's always like checkpoints or like there's nails in the coffin almost of like, eventually it gets to a point where it becomes too much, and the weight of society just, here we are. We have a new system. Time to move.
And I think your generation and the Zoomers as well you all understand that the system is working against you. You are openly questioning, why is it you can't afford a house? Why is it that on a 2-income, salary, having one or even two, much less 2 kids, is very, very difficult to afford. And your dream of owning a home is pushed way back relative to your parents and grandparents and their grandparents and grandparents. And so you kind of know that the system's working against you. And we are at that peak baby boomer retirement bulge, right? Where you just look at the number of active workers in their most productive earning years relative to retirees. And it's the lowest ratio that the US has ever had. That's why things feel like the wheels are coming off. And your generation is absolutely, and the younger folks are absolutely right in understanding why are you paying into the Social Security system? Do you think you will actually see any return on that money, right? My generation, the Gen Xers, we were the first ones to really openly question, why are we having to pay into this? I'll probably see something back, but somebody who's just entering the workforce, coming out of high school or college right now, you are right to question, why are you having your wages docked for this system? You're never going to see any return on this. It's sad.
It is.
And I think you understand it and are starting to question it. Yeah.
Yeah, exactly. You're seeing it. I mean, even like I was telling you offline, 20 years ago, I was very political in the 2000s. And if you would have told me today that 20 years from that point, people, maybe even the wealthiest guy in the world, who knows what side Elon Musk is on, doesn't matter. But if you would have told me that these things, like you mentioned earlier on Twitter, some of the biggest conspiracies or things that people have questioned kind of in the dark recesses of society are just open and out there, and people talking tax revolt, I would have laughed you out of the room. And I'm sure you probably would have felt the same 20 years ago, and just how fast things have changed in 20 years. Like I feel like we do forget how quickly things are really changing. So,
go look at some of JFK's speeches and ask, would he be a Democrat today? Go look at Bill Clinton's speeches. Would he be a Democrat today? Right. Even Obama.
I've seen some Obama. Yeah.
Some of his speeches, right? He is not in lockstep, or those speeches of yesteryear are not in lockstep with today's Democratic Party. It is amazing how fast things change in short periods of time, but you don't see it day to day during the change. I think we're in what Strauss and Howe call a fourth turning. It's very unsettling, because it feels like the foundations are crumbling from underneath us. And that drives a lot of people to curiosity, like you had yourself during the 2008 financial crisis. A lot of people go, and that was when I went down my deep dive and broad dive, trying to learn alternative schools of economic thought, because I knew that the mainstream narrative in 2008 did not make sense. And I lived it. I was working on the trading floor of Morgan Stanley, 1585 Broadway, right in Times Square during the 2008 financial crisis. So I lived it. I lived people coming back and reporting which banks had $100 bills that you could withdraw.
Jeez.
And which banks were flush out, and, had nothing to be able to satisfy the withdrawals, right? I lived it. Incredible. And it was a scary time. Yeah.
Unbelievable. Just to edify, I want to talk about the stable coins a little bit more and have you unpack this for a second. But just to edify what you're saying of things being built on layer 2 and layer 3, I just saw, and you might have seen it like today or yesterday, last day or two, they had done Voltage, or someone put out that they had done the first $1 million transfer or payment
on the Lightning Network.
Yeah. So
I've always been a big fan of the Lightning Network. Yeah.
Incredible. Absolutely incredible.
It's taken a lot longer engineering wise to get to a scalable point. But, like so many things, right? You kind of have a euphoria, and then there's the sense of reality. A lot of Bitcoin layer 2s got funded 2 years ago, and there haven't been good returns to the VCs who funded those layer 2 projects. That does not mean that there won't be. It just means that it's taken longer. And by the way, 2 years is nothing in the traditional VC sense. I recognize that coming from the ICO boom in 2017, everybody thought, instead of like looking at a VC investment as having 5, 7, 10-year return horizon, they were looking at 5 months, right? Because you could do the quick flip, buy it at a discount and then dump on retail, right? And that I didn't get involved with that. A lot of people did, and some people made vast fortunes, and a lot of people lost money in that. And I was never a fan of that. It was just a different form of financialization in that bull market. But I stayed away from all that, and I, just slow and steady wins the race. The hodlers who are not playing around with these financialization games, we're the ones whistling past, unfortunately, a lot of carnage in markets, and it's painful. I don't mean to belittle the pain that people are going through. I was pretty shocked when the Democratic Party itself, the National Democratic Party, the DNC, tweeted out gloating at the financial losses in the crypto industry. I think that's tone deaf. They don't understand how many Democrats own crypto. Yeah. There are a lot of Democrats. It's like Michael Jordan once was asked, why do you not get involved with politics? And he was registered as a Democrat, but he refused to talk about it. And his response was, because Republicans buy sneakers too. And he was in the sneakers business, right? So I kind of pull that analogy and say to the Democrats, Democrats buy crypto too. So gloating about the losses, I get that there's the Elizabeth Warren wing of the Democratic Party, would love to have a CBDC and wants all these private monies to be completely obliterated. She tried and she failed. So you would think that she would have learned a lesson, but apparently that lesson hasn't been learned yet.
There's one thing more important than Bitcoin: the time you have and the people and relationships you build. In a world full of noise, the real signal is meeting with other Bitcoiners IRL, finding Bitcoin-only events, connecting face-to-face, and supporting the circular economy through Bitcoin-friendly merchants around the world. That's exactly what Club Orange is built for. Build your circle. Support Bitcoin-only companies. The only place in the world you can find all that in one spot is the Club Orange app on iOS or Android. Go to cluborange.org, what used to be the Orange Pill app, or scan the code here. Everything you are learning in this episode is completely moot and does not matter if you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party. This is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com Suppression.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON. So we'll try to weave together a couple of these things. We touched on stablecoins a little bit, and I know before, I don't know if this was a previous pod I'd seen you on, or maybe it was Danny's a few weeks ago or before even, but stablecoins being a healthy detour, or if it was earlier in this pod, but also even Larry Fink, he's been talking a lot about tokenizing everything. We're going to tokenize this, we're going to tokenize that. Yep. And then, you guys have what you're doing at Custodia. If there's some way you could kind of unpack these three things, I have as a triangle in my head, these three different things, and some of them go together and some of them don't, but I'd love for you to kind of just unwind some of this and just maybe, because again, someone who's in the industry for years now, even for me at times, I'm doing this all the time, right? I mean, you're like partially confused on what's going on here. So I'd love for you to kind of just unpack this for the average person.
Yeah, well, what Larry Fink is talking about and what all the big TradFi folks like CME and the JP Morgans are talking about is distributed ledger systems, not necessarily Bitcoin and Ethereum. In JP Morgan's case, they had their own. They have their own private blockchain. There are private permissioned blockchains that have been in production. When I used to work for a startup called Symbiont, we got one in production in 2016 with Vanguard, right? And all this is shared infrastructure so that you don't have to duplicate and reconcile data. So they're talking about a different problem. That's not the philosophical underpinning of Bitcoin, but it just takes the technology itself and applies it to a real world business problem, which is the perpetual out of syncness of the ledgers of Wall Street and the banking industry because of delayed net settlement. This is the problem that Lynn Alden so well described in her book Broken Money, that we've been able to send messages at the speed of light ever since we had the transatlantic telegraph. So from the mid 1800s, we've been able to send messages, the data leg of a transaction, but the money leg, when money was physical gold, would sometimes take weeks to settle, right? So Bitcoin is now able to settle the transfer of value at the speed of light at the same time as we can transfer the data, the instruction leg of a transaction at the speed of light. So that's what changes. So what's happening is Wall Street is trying to take the best of those technologies, not the philosophical angle, really just the how do we create distributed architectures within the financial system so we're not constantly having to duplicate and reconcile. Boy, if we can create atomic settlement, a real-time gross settlement of payments, that literally takes away the need to reconcile, because every party using the same distributed ledgers can verify for themselves that the transaction has taken place. There's no duplication of data and there's no need to reconcile it. So that's the true north. That's where we're heading. And that's where most of Wall Street is heading. I've been really impressed by it's kind of like, 10 years ago, part of the reason why, by the way, Jimmy Song and I were both working for, and he talks very well, very articulately about the blockchain, not Bitcoin start that he got. And I did the same thing. I was thinking that Bitcoin was a step too far for TradFi, that they were going to go just like they did with the internet. Well, we have to have the walled garden intranet first before we open the back end of our systems and allow strangers to interact with our IT assets. We're going to do the intranet first. And then eventually they got comfortable and tore down their back ends and opened their architecture up in a TCP/IP system for anyone to be able to interact with their architectures, right? And so you got the benefit of the internet. And that's where we're headed with these technologies. Everything, because of the way that payment systems worked, has been in walled gardens. We're now tearing those walled gardens down so we can actually get the benefit of the internet for money. We've never had that. And that's where we're headed. So now the interesting question, what architecture will ultimately prevail? I believe it's going to be Bitcoin, because Bitcoin is the immutable source of truth. A lot of people think because Solana, for example, has much higher throughput, that it'll be Solana. The centralization inherent in how few nodes there are on networks becomes a big criteria for large financial institutions. They don't necessarily want to walk into their competitors controlling their destiny, right? So they have to be comfortable that the systems are truly decentralized and have to be done in such a way. But I will also say there are going to be pockets, just like what I got live at Vanguard at my prior startup. There are going to be pockets where you don't care about how centralized the nodes are on the particular network. And so there are absolutely use cases for all of those, the private blockchains, as well as, the more centralized versions of the decentralized systems, right? Where there are public nodes that are being operated. Bitcoin is by far the most decentralized of all of them. And so for the security that you need, there are people willing to pay for that security for Bitcoin. The cost for Bitcoin security is a lot higher than for Ethereum's, which is in turn a lot higher than Solana's, right? And you start to get more centralization as you go down the different coins, right? None of this, I'm not making a value judgment about it. I'm just saying it is, right? And putting a lens of a traditional financial institution on, first of all, they're going to go with the battle-tested, pen-tested systems, but they're also going to look at what are the risks that somebody takes it over, and there's data loss or loss of control over the critical data that the institution needs in order to function. That's how banks think. They're required to think in terms of risks, and they're required to look at the tail risks and assess what's the probability of those tail risks, and to put controls in place to try to manage around those risks. They're not required never to take risk, but they're required to have controls and to have identified those risks. So long story short, I do believe ultimately that Bitcoin will be the one, because money is just too important to leave to centralized systems. And if you're going to duplicate and reconcile, fine, you can use centralized systems. But if you're not going to duplicate and reconcile, the more decentralized systems, the better. And that's how I believe the banking industry is going to be thinking about it.
Diving into Custodia just a little bit further, I love kind of an update on where you guys are at, but also and I actually just tweeted this earlier, because again, the paper Bitcoin thing, started the paper Bitcoin summer, right? Like, again, we've been kind of dancing around this issue as well, obviously, in price suppression and all these wild swings we're experiencing down to the whatever. Yeah. I don't know if it touched the 50s. Now it's back in the 70s, and who knows, maybe the 80s, and then who knows?
Did we touch 40s. The 50s last night? I didn't even look.
I don't know if we did last night.
I know we were getting close. We were in the low 60s. Yeah.
I saw 60. Yeah. I saw 60 something, and then I saw a tweet about it, but again, I didn't check and verify it. So, that's shame on me. But
I mean, it's massive. So yeah, massive swoon, close. Right? We've seen those before, for sure.
You're right.
Right.
So everyone needs proof of reserves. What you guys are doing with Custodia is that we need cash redemptions gone from, Wall Street. It's got to be like-kind redemptions. Like what are the couple of steps we need to keep, phasing in here? And again, kind of segueing into, again, Custodia and what you guys are doing, but how does this all come together where we can, you start rooting this out over time?
Well, I hinted at this earlier that I think the most important thing that has to be done is to bring wallet infrastructure into the traditional banking system that is an account-based system. We're used to the crypto ecosystem being a wallet-based system, but the banking industry historically is an account-based system. And all the IT systems are architected around that. So this is a data architecture problem. How do you take a account-based system and integrate it with a wallet-based system? And that's what Custodia is spending a lot of time on. Now, the core Bitcoiners might look at that and say, why are you wasting your time working from the inside of the banking industry? Why aren't you just trying to go around it? And the answer is, that's where the money is, right? I alluded to this before. There's 5.7 trillion of demand deposits in the banking industry, right? Yeah. Hal Finney was not opposed to banking. And by the way, even the purists, the Austrian business cycle theory adherents who are the most anti-bank would concede that there will always be service providers. Even in the perfect world,
someone has to. Yeah.
Someone will provide a service of custody, right? And so not everybody wants to spend all their time working on that. And there will be service providers who will provide custody and analytics and, reporting and tax reporting and all those things, right? And so I never thought that banks would disappear. Banks just morph, and that's what's happening. So this is why what Custodia is doing, I see as actually really important for the evolution of Bitcoin, because somebody's got to be able to get that account-based system bridged to a wallet-based system. And that's the most important infrastructure to adoption, to the ultimate adoption. Once you do that and you provide that bridge, what are people going to do? At the end of the day, it's the end consumer. It's the people who own that $5.7 trillion of deposits. Those folks will be making decisions with their feet. And this is going to happen. This is back to the big debate between the banks and the crypto, the giant crypto companies that were meeting at the White House. That big debate is about making sure. I mean, the banks are concerned that some of that 5.7 trillion migrates over to the 300 billion at the stablecoin industry. That's where their big concern is. I don't see that, like I said before, as the big concern. I actually think you just bring this technology to the 5.7 trillion. And then it's not going to migrate out of the banking system into this side system that we have that's the crypto ecosystem. I'm not sure how this is all going to play out. I think it's a very dynamic environment. But as I look at it from first principles, getting wallet infrastructure to be able to connect that 5.7 trillion into wallets, that's an adoption, a very important stepping stone in adoption. And then people can choose for themselves. Sorry, go ahead.
Yeah, no, sorry, Caitlin. Do you think that it's, there's always, infighting in Bitcoin, there has been for 17 years, yes. And there always will be. I mean, it's just humans, right? We're political, we fight, whatever, etc. And I don't want to dismiss any of that necessarily, but in saying that, do you, what Custodia is doing? Because again, I'm trying to unpack this even for the average person. There's, people that are very advanced to watch a show, and there's people that are just learning where it's, hey, I understand as the revolutionary in me, it's like, well, we don't need the banks. We don't need this. But at the same time, you have to be pragmatic in the sense of, like you said, there's the money there and the banks are all there. So how do you reconcile that? Right. So is it the social layer of people being, hey, I'm plugged in and I'm going to call people out. And then, like we said earlier, Bitcoin, it's an auditing mechanism. So you're going to blow yourself up at some point if you do dumb things, plus what you're doing with Custodia. Is it all those things kind of together that keep the system healthy? Yeah. Okay.
Yes, absolutely. And this is back to what I was saying with safety back in 2018 when we were debating and ended up agreeing that the system will the old system will just die with a whimper, so to speak, not a bang, most likely. That people will just migrate with their feet because they'll walk to the better technology experience. And one of the most important things, and everything you just described on your list, is an engineering problem. That engineers can abstract away the complexity. And if we do our jobs right, we being Custodia and Vantage, we will abstract away the complexity. So that if you're not used to functioning in a wallet-based system, you won't necessarily have to figure out how to operate wallet software because it will look and feel like an account-based system to you. But what's happening behind the scenes is the account-based dollars are getting translated, actually converted into crypto dollars, right? Stable coins, tokenized deposits. That's what's happening behind the scenes. And then you can actually move the money fast. You can move it in a programmable way. It can cross borders a lot faster than traditional traditional payment systems allow. All of those basic business problems get solved, but you don't have to necessarily know. So you don't have to teach your grandma how to use a wallet, how to use, a MetaMask or a Ledger or Trezor, right? You don't have to teach them how to do that because it will be abstracted away.
Thank you for explaining that, because that's super important, because that just causes so much consternation, I think, among people, Bitcoiners, people that are learning, et cetera, right? And then have you seen, Caitlin's some of the stuff, I know Marty and Odell were just talking about this, just some of the AI agent stuff, and them just, again, voice to text and just things just work. Hey, go do this. And so talk about, I guess, just in general of the UI, the UX interface. Yeah, exactly. It's exactly what you're saying. Yeah, it's wild. Absolutely
I mean, and it's not even voice to tech. It's your refrigerator detects that you're running low on milk. And all of a sudden, the AI agent gets the Optimus robot to go to the grocery store and get a gallon of milk, bring it in, pays for it agentically using Bitcoin, and it shows up in your refrigerator and you never even knew it was taking place. Yes. That's what's going to happen. And by the way, we're not very far away from that very phenomenon where it's not even voice to tech anymore.
You had mentioned this recently as well, the LIBOR and SOFR stuff. I'd love for you to unpack this for a minute, because this is something like, I remember 10, 15 years ago, this was like I think when it was really starting to change, and it seemed like everyone was making a big deal with it. And then it seemed like it just kind of petered away, and I haven't heard about it much at all for a long time. But then you had just mentioned recently that European Union, between the geopolitical stuff that's going on, and then even some of this stuff that's going on in the background of LIBOR and SOFR, which doesn't get talked about at all, especially in the mainstream. They're getting squeezed. So how does this, just again, for the average person, like, how is this affecting maybe people here in America, but also what's going on in the European Union with some of these changes that are taking place?
Well, so you're alluding to what you discovered when you graduated from college and started to learn about the financial crisis, which was the LIBOR crisis, and the scandal for price fixing LIBOR, the London Interbank Offer Rate, which was the interest rate that really underscored U.S. financial markets. It was because the bond market is quite a bit bigger than the stock market. If you're not familiar with how financial markets work, it dwarfs the size of the stock market. And the vast majority of bonds in the bond market were priced off LIBOR, which is a floating rate. And corporates would oftentimes swap the floating rate bond to fixed rate using the interest rate swaps market. But that all got priced off LIBOR. So it was by far the most important interest rate and the most important data, frankly, underpinning all US dollar financial markets. And here's the punchline: it got set by a panel of British banks. How does that make sense? And it's funny, as I was working in it, the markets were so global that nobody ever really thought about it. But when you step back and think about it in retrospect, there was one American bank branch, the London branch of JP Morgan, I believe, was one of the 15 LIBOR panel banks that set the London Interbank Offer Rate in US dollars. So the most important interest rate was not in control by US interests. It was controlled by British banks. And I had to Tom Luongo and his hive mind. He doesn't tell me who credits him with realizing this, but he's the one who made this very public. And kind of once you see it, you can't unsee it. London was controlling the most important interest rate in the United States, and it was tied to the health of British banks' balance sheets. And part of the reason why the financial crisis was so devastating in 2008 was because of the fact that the British banks were really in trouble. Right. And you saw just a huge divergence between LIBOR and the secured lending rates in the US. So it took the Fed about 10 years. Exactly. It took the Fed about 10 years to move away from LIBOR, which is an overnight floating rate interest, unsecured, set by British banks, to SOFR, the secured overnight funding rate, which is secured by US Treasuries and is set by New York. Therefore, American interests, right? So we finally had control over the most important interest rate undergirding the U.S. economy. And the last LIBOR futures contract matured in October of last year. So we're finally 100% off LIBOR. It took a decade to get the market there. It's interesting that nobody's talking about it because it's massive. And it would have been massive if they hadn't been able to effectively transition it. But they were, which is why nobody's talking about it. The big story, it's like, while the powers that be have everybody fighting over the culture wars, the big story is control of U.S. financial markets got taken away from the globalists in London and brought back to New York. So that's the aha.
Is that why? Is that, I mean, it's just wild because you have like, the Trump election, Brexit and the Trump, which really, I guess, was kind of like this around the start of all that. And then that was happening. And then now we're coming full circle. Is that why the Trump administration looked like they came into the World Economic Forum and it was like guns ablazing, like it was Team America, like the cartoon. They were just like, don't care, screw you all, you people. Like, it was wild.
Right. As it was Matt Taibbi who said the most important story of Davos was the Howard Lutnick speech. By the way, he showed up in the Epstein files, but the Howard Lutnick speech where he talked about how globalization was no longer the order of the day. The U.S. was here to talk about U.S. interests. We were not going to care about global interests anymore, and that was a prescient observation by Matt, who's one of my favorite journalists.
Incredible. What is your quick thought, Caitlin, on just like, again, like this, we're trying to reshore, onshore stuff, do all this stuff. It seems like it's this multipolar order we're kind of going to, at least maybe from my chair. But there's BRICS going on that with the gold and silver, revaluations seemingly. I know that benefits America as well. It's benefiting Russia and China. Like where do you kind of see all this kind of playing out?
Yeah, by the way, the U.S. Treasury, I saw data just today, Friday, February 6th, 2026. The U.S. Treasury gold hoard has been valued at more than $1 trillion. It's a lot bigger than a lot of folks realize. And the same thing's true of the Fed, that the hole in the Fed's balance sheet that has been famously talked about is not as big as people think when you revalue the gold, which is carried on the books at $35 an ounce. And of course, gold topped 5,300 recently. It's hanging around 5,000 right now, but it's had a big move. And who benefits the most from that? It's as Scott Besson himself said, it's the U.S. because the U.S. has the most gold. But that said, emerging markets have been buying gold as well, right? Mm-hmm. China and Russia, instead of buying so many U.S. treasuries, have been buying gold in the last decade. So there are certain, geopolitical beneficiaries of the revaluation of gold. The biggest loser from it all, Europe. Europe and Canada. In some cases, countries have entirely sold their gold hoards. So they didn't benefit from any of that revaluation at all.
And again, I don't even remember now. Do we talk about the squeezing of the European, like the LIBOR and SOFR? Like how is that affecting European Union? Like in there, because they're freaking out about multiple things, it seems like, or maybe it's one thing, maybe it's a SOFR LIBOR thing, and it's coming out as this other geopolitical, because all of a sudden Trump's going around to like these different nations, and all of a sudden he like comes towards Europe, and like they loved it everywhere else, and then all of a sudden they're like, whoa, we don't love it here, like the Greenland stuff or whatever. So it is fascinating how that's working. But how is that squeezing them? I guess I don't know if that's the right way to say it, but how is the LIBOR SOFR? How does that affect?
Well, they don't have the control that they used to have over the U.S., right? It was to Tom's point, it's kind of the breaking of the last vestiges of the British Empire and the British control over its satellite state, the United States. We don't think of it as having been controlled by the British Empire, but we're kind of breaking the last ties here. And it really was for so many years. So that's what it is. It's that simple. And they're panicking. And yes, they're doing what Europeans do. I forget who it was. It Ray Dalio who said what Europeans do best is regulate. But regulation kills innovation, right? It strangles the entrepreneurs who want to do things differently, right? If the U.S., like I said before, if Tether had asked permission from the U.S., of course they would have been told no. And the fact that they could innovate offshore and not have to ask that permission was what enabled that innovation to flourish. And Europe just likes to just over-regulate. And that's what they do best. And so their reaction to this is to clamp down even more, and it's going to hurt them even more. The biggest data point to point to is Germany having shut down its nukes. And it's so interesting. I was working with the power and utility group at Morgan Stanley, and I've been gone from there almost exactly 10 years now. So this, my experience is, 15-ish years old. But all this green energy push back then and shutting down the nukes, man, in retrospect, does that look like that was an incredibly bad degrowth decision for Germany, which is an industrial powerhouse and needs continued access to cheap electricity. And by shutting down the nukes, they've really, really harmed. Talk about deindustrialization. It's happening in Germany in spades.
So what are your thoughts on the Fed here? I mean, Kevin Warsh obviously is nominated as the Fed chair. This was, again, just a couple of weeks ago, this was like really going back and forth between multiple people. And then from what everyone thinks, I guess, is, hey, it would behoove Trump to get the economy juice it up and get this thing going. Anything but that has been happening. And now Kevin Warsh comes in, and then the economy is really not liking that. His old comments are coming up. So I would love for you to unpack where things are going with him, going forward, where you think the puck is headed, I guess. Well,
just look at history, that long-term interest rates have tended to rise after presidents have named their Fed chair nominees. So, the expectations kind of get front run, if you will, and then it's kind of, buy the rumor, sell the news. And I think that may very well be also what's happening here. It's if you look at his background, he and I overlapped at Harvard Law School, although I don't recall meeting him. I've met him since, but not at Harvard Law School. And then we were both at Morgan Stanley, although not at overlapping times. So we know a lot of people in common. Very impressive background, and I wish him well. I know there are some Bitcoiners who will cringe at me saying that, especially given the prior regime at the Fed, some of whom are still there, kind of targeting us for daring to do something different. But that ice is thawing at the Fed, and yeah, so stay tuned. I think it's one thing that it is clear is Trump is not going to get control of the FOMC. He was going down that path last fall to try to get control of the FOMC and get enough nominees confirmed so that before February 28th, that's the key date. I should have finished the thought earlier when I said Trump's not going to get control of the FOMC by February 28th. That's the key date because the Federal Reserve Bank presidents, the 12 regional presidents, get reappointed every 5 years on the 28th of February of years ending in 1 and 6. Okay, so those rotating FOMC voters that come from, there are four FOMC voters in addition to the Federal Reserve governors that vote on the FOMC, and they rotate from the 12 regional Federal Reserve Bank presidents. The New York Fed president has a permanent seat on the FOMC, and by tradition has been the vice chair of the FOMC, but then the other three are rotating. And so Trump, he was making a lot of noise like he was going to try to get control of the Board of Governors so that he could fire some of those regional Reserve Bank presidents and try to get those that are less hawkish on interest rates off the FOMC. At this point, we're sitting at February 6th. It does not look like he's going to get control of the Federal Reserve Board by February 28th, like some thought he was doing. He was taking steps to go in that direction. It did look at that point last fall like that was what he was trying to do. This was the attempt to fire Lisa Cook, for example, Fed governor. So all those things, it does not look like they succeeded. And a few weeks ago, I heard Trump say, sometimes you just have to play the cards you're dealt, in response to a question about the Fed. And I thought, well, that's Trump now admitting he's not going to get control of the Federal Reserve Board. And lo and behold, I think when February 28th passes and he doesn't have new nominees confirmed, including a new chair confirmed, that Trump did not win that one.
So I know Powell's term, he still has a few more years technically, right? Do you think he's going to be sitting there trying to cause problems and rile things up? Like, where do you
who knows, right? I mean, Michael Barr stayed on, right? It wouldn't be the first one who just basically just dissents at everything now. Yeah. And Powell might try to do the same thing. Apparently, historians have said Greenspan was planning to do it as well. I've heard all kinds of wild rumors about the power struggle over, this criminal investigation into the building, over cost overruns and, threats that have been made back and forth. It's all wild. It's all rumors. So I think the only one who really knows is those who were, in the actual conversations. But needless to say, grab the popcorn and watch because Trump is trying to get interest rates down. It's part of his affordability theme and trying to do it before midterms. Yeah. But markets are not cooperating, to your point. Long-term interest rates have actually gone up a little bit. They're definitely down versus the Biden years, but Trump was trying to get them down more and they have not cooperated short-term. Yeah.
In saying all that, what do you think when it comes to either capital gains, like the Bitcoin Act, either the de minimis exemptions or removing the capital gains entirely or the taxes entirely, whatever it is. And not only that, but just the strategic Bitcoin reserve. Does America start buying Bitcoin at some point? Where do you see things headed?
Yeah, I've been pretty quiet on the strategic Bitcoin reserve because I know that's a project of hers, so I don't want to undermine her in any way, but I'm not a big fan of it because I just don't think the government should be buying those, buying private sector assets, period. I'm not a fan of, the investments that the US government has made in Intel, for example, or rare earth metals and, right. The same thing, right? I mean, are we a free market economy or not? Is one question. But yes, we will miss her. I don't know if she's going to be able to pull off the exemption, the de minimis exemption. She did ask Treasury Secretary Bessent about it recently, and he said they're working on it. So I don't know whether she's going to be able to slip it into a congressional bill to try to get the $600 exemption. I will tell you, every year this time of year, Americans who are in the crypto industry deal with a tax nightmare because we have to technically report stablecoin transactions too, right? So you just have a very high volume of data typically that you have to sift through, and it's just always a tax nightmare, just is. And so I hope she can fix it. But Treasury Secretary Bessent alluded that he's working on it from the regulatory angle if Congress doesn't pass a law. So let's see. I don't know that that's their high priority right now. Let's see. But during tax season, a lot of people in our industry will be complaining about it because it's just always a nightmare.
Do you have fears over centralization problems in Bitcoin, whether it's mining pools? Do you have any concerns in that world? Or
yeah, if you look at the hash rate, it's gone up so much. There's been such a decentralization because of all the people who have brought Bitcoin mining capacity to the market. It's a lot healthier now than it has been at probably any other time in the Bitcoin ecosystem. I'm on the board of Cypher Mining, which is one of the Bitcoin miners that has made a pivot to AI. And I remember asking a question early on: is what's the implication for the fact that some of these miners are pivoting to AI because they have very valuable power contracts and they've got infrastructure that can be used for AI and repurposed from Bitcoin mining? And what's that going to do to the hash rate? And the answer is probably not much, because so much new hash power has been coming in to the Bitcoin network. And if you look at it, you certainly don't see, that this had material impacts. That you definitely see some of the weather impacts where the interruptible load has caused Bitcoin miners to go offline just to support the power demand spikes during the cold snaps, or in Texas in the summertime, the heat waves. And so this notion that we can now have interruptible load, which is really valuable for the grid operators, I think folks have awakened to the notion that Bitcoin miners are actually helping to support the grid, not the opposite. AI is not interruptible load, not certainly to the extent that Bitcoin mining has been. So it's going to be interesting to see how that politically takes shape within the grid operators. But, watch that hash power as more and more people come in and that hash power keeps going up. I mean, you will see it now that the price dipped. You will see miners that are not profitable at the current price, shut miners off. That's normal. It's part of the strength of Bitcoin is that the difficulty adjustment automatically adjusts every 2 weeks.
What do you think the end game is, Caitlin, of Bitcoin? What does Bitcoin have to account for in your mind at the end of the day? It could be 1,000 years from now. The price isn't really the question here, and the time frame is not really a question. But when you see Bitcoin, you say, hey, it has to account for it's going to be the accounting mechanism. And so now we denominate everything in, hey, there's $900 trillion in assets. And will it be, hey, we're dividing truly everything by 21 million and we get there someday off into the future? Where do you think the final resting spot is?
Oh, I do think that's the final resting place for it. It becomes a world reserve currency. It's what Trace Mayer predicted in his 7 network effects that he released more than 15 years ago. It's just incredible how prescient he was. And Bitcoin ran the traps. We're at the financialization, the 6th network effect now, and world reserve currency is next. So yes, that's where I think it ends up, is world reserve currency. That doesn't mean the dollar's gone. It just means that it becomes a world reserve currency. It may take years for it to get there. I mean, in some ways it kind of is right now. It's just not a dominant one.
Any chance we ever get back to limited government here in America, somewhat close to what the founding fathers envisioned and started with?
Boy. You look at history, and who was it? Was it Benjamin Franklin who said, we've got a republic if you can keep it? And it was within the first few years it started to get chipped away at, right? And it didn't take very long for the centralization to come in. And boy, I think one of the lessons, unfortunately, of what we're watching culturally right now is just how we've turned into a crony capitalism system. And not a true free market system, and it's sad. So historians would say this is late stage Republic stuff, right? Look at Rome when the Republic fell and it became an empire. They still had Nero ahead of them 40 years later, right? So is it going to get worse before it gets better? Quite possibly. It's funny. I actually looked at that very timeline. I'm like, all right, how long after the Republic fell was Nero, and just the even worse debauchery than what we're seeing in the United States today? And it was 40 years. So it could get a lot worse before it gets better. I hope that's not the case for our children. Maybe, just the collective shock of the evil that was revealed. Maybe folks want to just live their lives differently as a result of seeing that, and they're not going to trust systems as much. But unfortunately, I think history shows things get worse before they get better.
And the two things for sure that they didn't have then were social media, which the good of it is we can see what's going on now, which they couldn't thousands of years ago, right? And we have Bitcoin. We have Bitcoin, and we have, so very transparent now. How do you see this year playing out? Just like in a zoom out macro sense, like how do you see 2026 playing out? And maybe even like the cycle, I guess, we have another 2 years, or maybe a little over 2 years for the end of this cycle. Where do you see things, going forward?
I think we're in a bear market, classic bear market. And it's funny, a lot of folks who said the 4-year cycle is gone. I never thought a 4-year cycle was gone. There's fundamental reasons why it exists. And it's tied to mining economics, as we were talking about earlier. As the price comes down, hash rate starts coming offline. It is cyclical. And the miners that are not profitable end up having to sell. And that creates cycles. This is a fundamental aspect of Bitcoin. And I don't think that the financialization and Wall Streetification of Bitcoin was going to be powerful enough to break that cycle. And what just happened is it kind of has been proven that it didn't. That's indeed accurate. It wasn't powerful enough to break that 4-year cycle. So, but for the broader macro environment, obviously we've got the midterms coming up, and this is a big inflection point, because if Trump loses the House, it's going to be impeachment after impeachment. And it's not looking like he'll lose the Senate, but as you know, it's a razor thin majority. And to get much done, he's still got to get cloture. You got to get to 60 senators to be able to close debate on things. And he doesn't have 60 senators right now. And if he gets an even thinner majority, then it's going to be even harder to get things done in the Senate. One thing to keep an eye on is the filibuster. I'm watching this. There's a very strong argument. We've seen the filibuster chipped away at. Ironically, it was the Democrats who chipped away at it for
15 years ago
for confirmations. Exactly. But for regular way business, is it going to be the Republicans that are going to chip away at it, or is it going to be the Democrats that take it away? I think the filibuster has its days numbered. And I think, boy, that's a double-edged sword, right? Because again, it just accelerates. The filibuster was there as a check and balance on power, and it just accelerates, the Nero, heading towards Nero.
I was just going to say that. Oh man, that's great. I was just going to say, oh man, unbelievable stuff, Caitlin. This is a wide-ranging discussion. Holy cow! Anything we need to hit? Custodia, anything at all that we missed that you want to touch on, or
just keep an eye on us. We're slow and steady, winning the race. I will say, last night the Texas Bankers Association released an endorsement of Vantage Bank, which is our partner. It didn't mention Custodia. That's fine. Vantage is the front-facing entity. They're the counterparty for the banks. With this, we're the back-end system, but it's fascinating to watch what's going on here. And they endorsed for pilot programs for banks to come in and start piloting our system for tokenized deposits. That is getting wallet infrastructure into the core of the banking industry. Keep an eye on that, because I think it's that kind of boring work is so important for adoption. And we were never going to get hyper Bitcoinization overnight, in my view. And I'm not sure I want to live in a world, even if we did, that had hyper Bitcoinization, because that meant massive collapse and social unrest that comes with that, and a lot of, early death and bad things for our loved ones. in that scenario. It's not a scenario that I'm praying for. In fact, I actually very much hope, and I do believe it will be a longer term whimper, not a bang. But getting wallet infrastructure into the core of the banking industry, that's what we're doing. And I think it's really important.
Amazing stuff, Caitlin. Thank you so much for joining us here. Just an honor and a wealth of knowledge. So thank you and keep up the good fight.
Yeah, all the best to you and your family. Cheers.
If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.